What is good, guys? I'm going to be making a quick video going over 3 steps that I take every single day going into the market before I even look to take a trade. These 3 steps are very, very simple, very basic, but I see a lot of traders, especially new, not use any of them. And at that point, you're kind of just going in the market blind or you're just gambling. So if you can actually implement these 3 basic steps, you're going to see a much higher win rate and just completely change your trading in general. Alrighty, so for the first step is going to be your daily bias. Your daily bias is very, very crucial due to having like a directional lean towards either you wanting to long or short the market. And the time frames that I use for finding my daily bias are the daily and the 4-hour. I will go much more into depth about it, but that is kind of the basics of finding your daily bias. Also, having a daily bias, like a clear draw of where you want price to go and a more of a higher lean towards a certain way, can keep you from overtrading, breaking your rules, and having like a clear sense of where the market should go. So the second step is going to be your higher time frame draw and liquidity. This can be unmitigated gaps, swing highs, swing lows, any type of liquidity on the higher time frame in a sense. This kind of gives you a bigger picture of where you want price to come to and maybe trade off of it or vice versa. Again, with your higher time frame draw and liquidity, a lot of traders, or most I would say, execute on the lower to mid time frames, whether that's like the 1 minute, 5 minute, even upwards of like the 15-minute time frame. And having like a draw and liquidity based off the 4-hour, the daily, the 1 hour even, can definitely give you again a way broader look on the market, because there is a lot of noise, manipulation, and chop on the lower time frames. So having that higher time frame draw is going to change your trading in general. Now for step 3, step 1 and step 2 don't even matter if you don't stick to step 3. Everyone talks about your rules, sticking to them, and the reason for that is just because it's true. That's really what's going to change your trading in general, and that's really hard for a lot of y'all to understand. But sticking to your rules, going in the market every single day with a plan or like a playbook of how much you want to risk, how many trades you're going to take, and if you're going to trade with emotions that day or purely based off analysis and what you've been building for months or even years. So again, the 3 steps are your daily bias, your higher time frame draw and liquidity, and your rules. If you can just get these 3 basic simple steps down and be consistent with them, you're going to see your trading change dramatically, and you're actually going to become more consistent with having confidence in yourself and your model every single day in the market. So now let's show some examples. All right, so the first step we're going to start with is finding our daily bias. We're going to use this area of price as an example. Obviously, we're going to start on the daily to find our daily bias, and we're going to use Wednesday as the example. So if we look at our daily, well, we want to identify our PD arrays and previous day low and high. So obviously we traded into this lower unmitigated daily gap here. And on the mid time frame, you can actually see in a second, we took previous day low here on Wednesday. So now going from our daily time frame down to our 4-hour, we can identify that we took previous day low. And inside of our daily imbalance, we actually have a 4-hour that we've constantly been respecting. Now, if we drop back down to our 15-minute time frame, if we look at time, because I obviously keep time in mind when looking to trade, we actually took previous day low at 5:30 a.m. So this was 6:30 a.m. is market open for me. I'm on the West Coast. So this was actually a pre-market. We did sweep. So after seeing that, because I actually am on charts around 5:30 to 5:45, looking for these 3 steps, I now have my daily bias, which is going to be bullish. So now getting into step 2 of looking for our draw and liquidity or our higher time frame draw and liquidity, there are kind of 2 main things that I look for when looking for this step. That's session highs and session lows and unmitigated gaps. So our draw and liquidity for this example is going to be Asia highs and London highs. As you can see here, what makes this a stronger point of liquidity is due to these highs being relatively equal. Now, the reason these are relatively equal is due to our London high here not sweeping our Asia high. So if our wick looked something like this, then they wouldn't be relatively equal because price already took out our buy side here. So we found our higher time frame draw and liquidity, and we found our daily bias. Now for the last step, just stick to your rules. It sounds simple, but it's actually the hardest. Stick to your sizing, manage your risk right, and have patience in the market. Let's just say break a structure for value gap as this entry. There is how the trade would play on the 5-minute time frame. Very simple, very basic. But yeah, that is the 3 steps that I take every single day before I even look to place a trade in the market, and you should definitely do the same.